Ever feel like the world of finance is changing faster than, I don't know, like a rocket?
Uh-huh. Yeah, I think we can all relate to that.
I mean, between crypto and like all these new ways to invest and borrow money, it's kind of a lot to keep up with.
Definitely. And it's not just us feeling it, you know.
Oh, yeah.
Regulators are definitely feeling the heat too, trying to figure out, how to oversee this whole rapidly changing landscape.
So that's what we're diving deep into today. It's fascinating, really. I've got a bunch of research here pointing to a real crossroads for finance, new players popping up everywhere, products like, as you said, crypto, and this constant question of, well, balancing innovation and keeping things safe for everyone. Yeah.
Absolutely. That's the key tension, I think.
So to kick things off, maybe you can set the scene for us. What are some of the big things that jumped out at you from all this material?
Well, the first thing that struck me was this idea of access and control. It's never been easier to access financial products and services. Think about it. Just a few years ago, if you wanted to invest, you had to go through all these hoops, talk to brokers, tons of paperwork.
Yeah, that was a whole thing.
Right. Now you can open an app and buy stocks, trade crypto, even get a loan in minutes.
Oh, from your phone.
Exactly. But this ease of access, it comes with, new challenges.
Like what?
Well, our sources point out that regulators are really worried about ensuring national security, protecting our data, and of course, preventing harm to consumers, which is, kind of a broad category, but it's a huge concern.
I can imagine. Because with all these new players and platforms, it's got to be harder to track everything that's going on.
Right, and one of the sources specifically mentioned this concern about companies offering like practically identical products, but they're operating under totally different rules.
Oh, I see. So like you might think you're comparing apples to apples, but really it's apples to oranges.
That's a great way to put it. And that's where the regulators are stepping in, trying to figure out how to, you know, level the playing field and ensure everyone's playing by the same rules.
So how are they trying to do that?
Well, one approach they're taking is basically trying to adapt existing rules to these new entities and products.
Okay, so they're taking the old playbook and trying to make it work for the new game.
Kind of. But the question is that enough? Or do we need entirely new rules for this new financial world?
I mean, that's a huge question. And it's interesting because on the one hand, you want to encourage innovation, right? Like we don't want to stifle the progress that's being made.
Exactly. But on the other hand, you can't just let things run wild, There have to be
Yeah.
some safeguards in place.
Totally. So what are some specific areas where regulators are like really focusing their attention?
Well, one area they're looking at closely is market structure.
Market structure. That sounds kind of technical. What does that mean for everyday people?
So it's actually really important because it's all about how trades happen. When you buy or sell a stock, there's a whole process that happens behind the scenes. And regulators want to make sure that process is fair, efficient, and transparent.
Makes sense.
One example is the move to T+1 settlement. You familiar with that?
Refresh my memory.
Sure. So traditionally, when you traded a stock, it took 2 days for the trade to settle, T+2, meaning you didn't actually own the stock until 2 days after you bought it.
Oh,
Now,
okay.
they've moved to T+1. So trades settle in just one day.
So what's the impact of that?
Well, it reduces risk, because there's less time for things to go wrong between the trade and the settlement. But it also puts more pressure on brokerage firms and clearinghouses to process trades faster.
I see. So it's like speeding up the whole system.
Precisely. And that requires a lot of adaptation and investment in technology.
And I guess regulators want to make sure that doesn't create any new problems, right?
Exactly. They're examining how firms are adjusting to this faster settlement cycle. Are there any vulnerabilities? And are investors being treated fairly?
So is this all about Wall Street stuff, or are there implications for the average person out there?
Oh, there are definitely implications for everyone because ultimately these changes affect the costs of trading, the efficiency of markets, and even things like how quickly you can access your funds.
Right. Okay. So what else are they looking at besides this T+1 thing?
Well, another big area of focus is data access and, consumer rights. It's a huge topic, but essentially regulators are trying to ensure that consumers have access to their own financial data and they're protected from, unfair or discriminatory practices.
Okay, that makes sense.
For example, they're looking at things like healthcare pricing. How transparent are hospitals and insurance companies about their costs?
Right. That's always a mystery.
It is, and it can lead to people being overcharged or, not being able to make informed decisions about their health care.
It's like You go to the doctor and you have no idea what anything's going to cost.
Exactly. So regulators are trying to bring more transparency to that process.
And what about AI? Because I know that's a big buzzword these days. Are regulators concerned about AI in finance?
Oh, absolutely. It's a huge focus area because,
Yes.
AI is being used more and more in financial products and services.
Like what kinds of things?
Well, think about loan applications, for example.
Okay, yeah.
Algorithms are often used to assess your creditworthiness, determine your interest rate, things like that. Same with credit scoring, and even, those personalized financial advice apps that are becoming so popular.
So there's AI behind all of that.
Often, yes. And the concern is that these algorithms could be biased, or they could be used in ways that discriminate against certain groups of people.
Oh, wow. That's a bit unsettling.
It can be. And that's why regulators are really ramping up their efforts to test and monitor these AI systems. They want to ensure they're fair, transparent, and accountable.
So it's not just about stopping bad actors, it's also about making sure the systems themselves are working properly.
Exactly. And that's a really complex challenge because, AI is constantly evolving and these algorithms can be really opaque, even to the people who create them.
That is a little scary.
Mm.
So it sounds like regulators have their work cut out for them.
Yeah.
Are there any other big things on their radar?
Well, one more thing I wanted to mention is mergers and acquisitions.
Okay, what's happening there?
So there's been a lot of consolidation in the financial industry lately, big companies merging with each other.
Right, we've seen that.
And regulators are, taking a closer look at these mergers to make sure they don't harm competition or hurt consumers. In fact, the source mentions the updated DOJ and FTC merger guidelines that came out in 2023, which suggest a much tougher stance on anti-competitive mergers.
Interesting. So it's not just about new technology, it's also about how the whole industry is structured.
That's right. It's all connected.
So wow, this has been a lot to take in. It sounds like the financial world is in a period of massive change, and regulators are racing to keep up.
That's a great way to put it.
So maybe to wrap things up, what's the one big takeaway our listeners should keep in mind?
I think the key takeaway is that staying informed is more important than ever.
Yeah, totally agree.
Pay attention to who you're trusting with your financial data. Read those terms and conditions no matter how boring they are.
Uh-huh. Yeah, the fine print matters.
It really does. And don't be afraid to ask questions, If something doesn't seem right or you don't understand something, speak up.
Great advice. And I guess the big question for all of us is, as technology keeps disrupting the financial world,
Yeah.
how do we make sure innovation benefits everyone, right? Like without compromising things like fairness and security.
Absolutely. That's the challenge we're all facing.
Something to ponder.